All right. I know what. We'll do that later. All right, let's see. Let me just move this thing around here a little bit. Try to salvage some resources. Okay. I think I can finally see chat a little bit more proper now. Now I don't have to squint so much. Yeah. Things are changing. All right. So, what's happening, everybody? What's the word? What's the word on the streets? Jonah Pova over on Twitch. Very nice to have you. What's happening, my man Ed Hughes? What's shaking? Oliver Novell, hello, hello. Crypto Render, what's up? What's up? What's up? I know it's been a week. It's been a week. I know. Sorry. Things came up. Things got busy, and other things came up, and well, you know what? Here we are, and that's the important thing. Coffee is hot, and I'm chilling. That's what I'm talking about. That is what I'm talking about. Good for you. I need some coffee. I am tired. Holy macaroni. But we got things to discuss, don't we? Yeah, Wallbanger. That dude does like numbers. He's our resident number guru. As long as he's liking numbers, we're in good shape. Right? Right. So, I feel like the mic's not correct. You guys hear me all right? I feel like I got to get like really into it. I don't know if I want to get super into it. All right. So we made a few moves here to the downside, which is okay. We had a couple failures. We did have a nice pattern and a couple good support resistance areas that were tested and retested. We had a perfect classic support resistance flip that I wanted to show you guys, but it was on a different chart. It might have been let me check this one real quick. It might have been on this one. But it was man, it was nice. Mike's fine. All right, thank you. Thank you. Yeah, so check this out. So, like originally I had this going, and I was looking in the 1 hour, and I was looking at a couple levels that we made, further to the downside, right? Because we came up, we did this like big M thing over here after the bigger drop, right? Up here somewhere on the top left is when we tested 9,000. And we came down, a little harsh, right? And then it swung out. So this only goes back June 4th. So you're talking like less than a week. Found that level down here. But remember last week, we talked about the gap, right? The CME gap going down to like 72 something. And we didn't quite get it, but then we had developed this pretty good looking try over here, just for what it was, right? It wasn't anything more than it was respecting this trend. After it started, right, it developed from back here. All right, so that's like the testing ground, right? And it came up and it moved all the way away from it. It created itself a high and then tapped out. But these wicks, look at that. Once you had the trend, right? Confirmed right here on the third one. Once you had the trend, look at this flip, right? So we came down, we sat right on it, right? And then we pushed all the way down, made new lower lows, just locally, right? And then we pushed all the way back up, and then bang, flip with a retest, and then smashed up through, right back. Look at where it found resistance, right? 1, 2, 3, 4, 5, 6, 7 hours in a row, all hanging in that one zone, right, and then smashed up above, banged our head, right, on these levels over here. So the yellow ones are the horizontals from the drop. You see that? See how like we came down, right, all the way down here. We pushed up, and then we just like stopped, right? And it was like, nope, we're going to keep going down. All right. And then when you found support, it was down here because then price reversed, basically did a double top, and then you dropped, right? So these levels, this area of trading is important. So because of that, when we come back over here and we flip, we say, all right, well, we pushed up, right? And then we kept smacking our head on something up top. Well, that was the ceiling right here from this area of accumulation, right, during the drop down. This is sort of like we dropped and then we like kind of hung out for a few hours and then we dropped again. But then since then we've been painting lower highs, right? So it's just your high, your lower high, your lower high, your lower high, your lower high. Okay. Now from there though, what's confusing is we had a lower low and then we had a higher low. You had a swing fail, right? And then you had a lower low. So now you're back in trend, right? And then we got down back to this level down here. Now, we didn't have much here as far as a confirmed trend. We only had this leg and this leg, right? But this was well respected, but not a confirmed trend. Well, it became a confirmed trend right here. So if you notice that, look at this flip down here, right? You push through it, you come back up, you retest it, you fail, you come back down. Now, it almost got a double test, but instead it just stayed within trend. Pushed down, stopped out of nowhere for no reason, where right here, confirming our trend. Coming back down, and look at this. Again, another retest. Okay, very good. Confirming further downside. Now we're coming back up. So what do you think's going to happen, or, you know, what would be the most likely thing to happen? Probably, if things stay the same, we'll come back here and we'll do a proper retest on that level. You know what I'm saying? So, like, this is what we've done. We've come down, we had one level, we flipped it, retest, push, down, became support, right? Support for 1, 2, 3, 4 bars, right? 4 bars, hour chart, 4 hours. Dumped, came back up 1, 2, 3 hours later, and for another hour after that, this became a flipped level of resistance. So now we broke another leg right here, this guy that we've used before, right? So with the way Bitcoin's been flipping on these levels, I would not be at all surprised if either before we close, if it's before we close 76.81, if it's after we close and on tomorrow's candles, I don't know, 76.79, let's say, ballpark, come back up, push, maybe we hang there for an hour or maybe it's immediate, but then, you know, I would be expecting another leg down. 72 is the level to fill that CME gap, so that's like ballpark, right? I'll just put the arrow like near 72.10, whatever, that's fine. So something along those lines, but then, you know, major support down at 68, and then, you know, what we're gonna talk about soon, in the next few minutes, right, is the weekly, right? Because that's the big deal, right? So the weekly candle close is what's shaking right now. Now, we already had our first bearish week after a pretty solid run up over the last few weeks. So, you know, we had that crazy doji that was just, yeah, everybody was sort of on the fence, where it's one of two things, right? It's either going to be hesitation, you know, and whoa, what the hell? Don't worry about that. Don't worry. Let me just get that out of here. Yeah, well, we're going to allow that for now. So it could be one of two things, right? It could be hesitation and then continuation, which is what we get here, right? Hesitation, right? And then continuation. Or, you know, it's the inevitable end of current trend and then a pullback. Oh, sorry. What do we got? Frankie, hello. I've seen a couple people say BTC to 80K and say Elliott wave third wave on weekly or monthly candle. Okay. Early stream today, yes. Just only by a few minutes. Early on, early off. I'm starving. What is that volume indicator on the side? Can't find it. That's the volume profile. I only use it on a few charts. That's the volume profiler for TradingView. That's it's right here. Oh, it's only on the paid version. So if you have a free version, then you won't see it. Why I didn't get notification that you're live now? How long are you streaming? I'll be streaming for like another half hour, but yeah, the notifications, I think all last week, well, no, there wasn't much streaming last week, so don't worry about it. You didn't miss that. But before that, yeah, there was something going on. I think YouTube wasn't informing you guys or who's ever like, whatever, subscribed or whatever to the channel. Like they weren't getting any type of notification. I set up Restream to send a tweet out, which I don't really like doing, but I don't know. I'm gonna try that for now, and I think we'll probably end up not sending those tweets out. I don't like want my feed just filled with, hey, join me on Strat. You know what I mean? Like, look, if you know we're here, we're here. You know what I'm saying? So you guys know where we're at. You know, we don't need to advertise it to the world. Word of mouth, organic growth, right? That's kind of how I do things. GVT, BTC, ARC BTC, VP, VR, I think. Yeah, Felix, it's the volume profile. I thought I just showed you that. Indicators, volume profile. You got 3, fixed, session, and visible range. Those are only in the paid version. You have to have a paid version of TradingView. I don't know what category you need to be. I think they got 3 different paid versions, but yeah, it's a TradingView only indicator. But I do think they did finally allow it for Coinigy, I believe. So now, like, if you're a Coinigy member, or if you use their platform, because they link right to TradingView, so that they use all TradingView's stuff, but they don't have their, like, the strategies and the Pine script and the Pine editor and all that jazz. But I do believe they did port over the volume profile. Just keep it simple. Hit the like, people. Frankie's like Frankie and Snow are like the 2 promoters of the channel. I love it. And no, I'm sorry. There's a few of you. There's always a retweet on the Twitter one. I appreciate it. I really do. I hope you guys know that. Anyway, let me get off of this chart because I wanted to get on the Coinbase one, not the MEX one. Because I had some other things on here that I wanted to look at. Plus, we got more history. So on the weekly, and let me actually write these down. I'm sorry, because I don't want to forget. So what do you got? GVT, BTC, and ARC BTC. Yeah, we'll do those first. Keep it simple. People will come to you. You are awesome, TA. Ah, man, dude, I appreciate that. Yeah, I don't really push the issue. You know what I'm saying? They'll come when they come. You know, and we'll all have a good time. We'll all have a good time. Oh, so that's what I'm doing. I'm like, I opened up that one because I wanted to show you that flip was nice. That was a good flip. You know what I'm saying? Anyway, so on this weekly, we'll talk about it briefly, and then we'll go. We'll take a look at that Genesis and the ARC one, and then we'll come back for the actual close. All right, so let's slide that out of the way. I just wanna mention that on here for what we were looking at last week, right? So the MEX chart had it bearish, but it doesn't matter either way. The philosophy behind it is the same. Trading literally went, nowhere. $4.83 on, an asset that opened at $8,700 is 0.06%. I mean, it's nothing, right? It's less than nothing. It's brutally nothing. But it was pivotal for traders because it was so much indecision that it really could have went either way, and because momentum is still on the upside, right? Momentum is still up, right? We're still in a local uptrend. That after touching that 9,000, like you could see the salivation pouring out of these people's mouths, right? They wanted 10. 10 would have made them pretty happy, and we didn't get it. So we just we talked about it on here a few weeks ago about just coming back to these levels would be ideal. Are we going to see 4,000 or 42? I don't know. It seems like a stretch, but in the grand scheme of things, it's really not, right? It's just a pullback. But more than likely, now we have pullback, right? Now it's officially a pullback. Just what are we going to pull back to? Is it going to be like a 236, a 382? We going down to the 5? Is it going to be like a 618 pullback? Are we getting like real deep? And so that's what these markings, although as difficult as they are to see, this zero line down here, which is very difficult to see, and then you see 886, 786, 709, 618 is this green bar, right? So we put that green bar in there a while back, and it also is confluence with a 382 from the drop, right? So somebody asked me the other day, I put something on Twitter with a chart, and it had a retrace, right? I had a fib to the left side, and I had a fib to the right side, and they're like, well, what is that all about? And so the short answer is, if you're measuring top to bottom, right? If left to right, right? Left to right. If you're measuring top to bottom, you're trying to find areas of resistance back to 1, right? Back to 1. You're trying to get back, and you want to know where you're at as you do it. So if you go top to bottom and you hit the 236, that means you have retraced 23.6%, right? Back to your top, whatever that location was. In this case, it's 65.40. If you're going the other way, if you're going bottom to top, you're measuring the pullback, right? That's why the 236 is closer to the top. If you go bottom to top, you're measuring, when you hit the 236, you have lost 23.6% from your high, right? From your high. So you're basically trying to find levels of support on the way down, right? So resistance coming back to your 1, right? Top to bottom, and then bottom to top, you're looking at support, possible support levels, right? Saving it from going all the way back to 0. So if you're unfamiliar with Fibonacci retracements, pullbacks, using those levels, then that's like a 30-second rundown on how I use them. And I think how I don't want to go on the fence and say that's the right way to use them, but that's how I learned, and I was validated by that by traders that were trading far longer than I ever have. So that and that's what I go by. And regardless, like the fact of the matter is, right, they work, right? Like a majority of the time, they do work. You'll notice how they hold, and you'll notice how you get confluence on some stuff. So anyway, what I'm saying is, I'm talking about confluence, right? So the 382 retrace from our drop, right? This is a local fib. This is not a fib from all-time high. This is just a local fib to measure the move. This move was a big impulse move, right? It was a big drop, right? So it holds some weight on the chart. It's more important than this kind of boring stuff right here, right? This is significant. This candle alone, right, was 29% on an asset that opened at 55.60. Okay, that's $1,600 in a day. Not to mention, it went even further, right? It traded even further. We just, we salvaged a little bit. All right, but anyway, so the 382 level, right, is a good level. Now, it's not exhausted, even though we hit it right here. We blasted through it. Now, if you know anything about gaps or gap theory or just price action when levels get skipped, right? They do like to kind of trade within those levels that were skipped over. So you skipped over some levels right here and right here with these two dramatic candles. You can see like all this little like intra trading, right? Now this is a daily chart, so you go on like a 4 hour and you'll see like all this little trading is, more resolution, right? More pixels. You got better detail. You'll still see a big giant candle that just like blasts through like all these other levels. And that's a problem. However, that being said, the 382 retrace lines up like almost perfectly with our 618 pullback. Now, again, if you're familiar with Fibonacci's, in crypto, for whatever reason, consider that a normal pullback, right? Between the 5 and the 618 is a pretty normal pullback. A deep pullback, which is not unlikely on an altcoin, 786, 886, really from the 709 to the 886. This whole general zone, we found support on so many altcoins that it just became like the normal. If you're going to hit like a new all-time high, you might be like pulling back to the 886. So you could safely put some buy orders down there, and after a few days, like you might actually get hit, or even if it's just you tag it down real quick and then smack it up, like that's fine. That's like an instant 10% gain if you were able to catch that. What you have to be worried about is continuation to the downside. That's what you need to be aware of. And these will typically smash it, push a little, because momentum in this market is still young, right? So push it a little, and then then level off and close on it, and that's your new support. All right, so we have a few immediate levels, right? We have our 69 to 67 zone, right? This is an area of interest to come back to. We got a deeper level down here, 56 to 50, call it 55, 56 area, right? And that's just under the 236 pullback. So for all things considered, right, this one candle is barely a pullback. It's barely open. You're not even a 236. It's not even a 236. It's like it's nothing. Well, where the hell is my? Where is it? There it is. No, is that it? Yeah. So that's that. But where is my high side? I don't even see it on here. Which is strange. Strange. That's my 0. So that's. I feel like this is all. What's going on here? There we go. Yeah, okay. We got to put that up there. So we do have a 236. Jesus, what the hell? What is going on here? So what is that? 90 what? All right, hold on. Bear with me. Bear with 9090. I don't know why that was all the way over there. All right, so we just got to make that say 9090. We're straight. We're straight. I'm looking at it, I'm like, this, like the words are coming out of my mouth, but it's not even making sense. Like, that don't look right. All right, 9090. There you go. Okay, so, top, bottom. Now that should be over here. I just don't do it so I can see the numbers. So don't, I do weird things with fibs. So Don't worry about it too much. Worry about the number, though. Okay, that's essentially what we're looking at is this right here. So yeah, it's granted it's hard to see now, but the price wasn't in our way last time, so I can move this one too. Don't worry about it. What's our low on this one? 31.28. So let me just slide this over here where we could see it, and let's fix that to 31.28. 31.28. Okay, here we go. Now we can actually see stuff. Okay. So 236. That's why that box is here for the 382. Now life makes a lot more sense. So the 618 is actually up top over here. Okay, and that 382 lines up with our 786, not our 618, our 786. I don't want to give you guys bad information. That was my fault. Careless on my chart, which is uncool. So a 236 pullback in traditional markets, stocks, that's totally acceptable. In crypto, it's as shallow as it gets. What would make the more sense, at least for Bitcoin, would be at least 382. All right, 236 is, we see those in strong trend continuation. I don't know if we can call this strong trend just yet. It has delivered quite nicely as far as price action is concerned. Right, took 1, 2, 3, 4, 5, 6, 7, 8 weeks of solid growth, and then we had a giant candle, right, a 26% $1,000 candle, and then we had 1, 2, 3, 4 weeks of good growth, right? And then we had another, $1,200 candle, 22% opening at 5,700, followed by another really good candle, right? Another $1,200 candle. You got to remember, this is in 2 weeks, right? It went up $2,400. It's really impressive. And then we had a slowdown week, right? Only up $500. You know what I'm saying? But it also, at the same time, it painted a hanging man. So a hanging man candle is, for all intents and purposes, right, without getting too deep into it, that's your trend ending, uptrend ending, right? Reversal candle. So in any event, we could see further downside, or we could be looking at just potential hesitation, where you see something like, this, like you big down, up, and then you're just like kind of sideways for a little while. That's kind of a bad example. But, like this, right? Big up, sideways, that would represent, basically this and this. Not much movement, and then down again, right? So down. So you had up and then down, right? But you didn't push down as far. You had a higher low. Then you kind of went sideways, push, sideways until right here. And this was the candle that sort of marked, okay, now it's time to start getting, long. Support on the weekly has been very well respected. That is this right here. That's your 7 EMA is the white one. So it's an exponential moving average, which means it calculates it differently, using putting more weight to the most recent history. So even with the most recent history being a drop of $1,100, it's still maintaining support. It's also maintaining a really good distance from the 20 simple moving average. So all things considered, I mean, it would be pivotal to break it, right? To break it is substantial. So even on the downside, right, we were down. We're under it. Under, over. This first candle, if you only traded the EMA, the 7 EMA on a weekly chart, so long-term investors, they would have been long at 37.35 without blinking an eye. Right? Now, generally, you would like to close above it and be above your 20. So this would be the high-risk trade. The lower risk trade would have been right here, and that's when you crossed it and you're trading above it, and that would have been at 4,100. So depending on their style, right, they may not exit until you close below it, which could be a, $5,000 candle, or it could be, a $100 candle. So in any event, just to try to give you some perspective on what's shaking. But since that rant, we did close the candle out, so we might as well go over the numbers. 87.36. That's where we opened. We hit a high of 87.42, so only $6 to the upside, and a low of 74.27, closing it out 76.34 for a total of $1,101 to the downside, 12.6%. Now we open the candle bearish, selling right off the bat. We'll hit the 24 just to get a closer, view on what may be shaking. But we can see, from our high, right? We did push. We made our 90 high, our 90.90. A little drop down, pull back, previous structure is good. Pull back, swing fail. Swing fail brought it more to the downside. 2 big candles down, and in which case you closed below your 7 and your 20. You opened up below the 20 and stayed there, right? We haven't been above the 20 yet. Now our 7 is acting as local resistance, right? We touch it, right? We come down. We touch it, we come down. We touch it, we come down. And that will continue until there is enough buying pressure to outweigh the selling, right? The selling. All those wicks to the upside, right? Those are all people selling or front running other people selling in order to get out of that particular asset. So daily is bearish for sure. You would like to have a nice candle push up over, and then of course, come back, you could test it, but you can see how well it's respected. It's a little looser than the weekly, where the weekly rides it, like it did over here. The weekly always rides it, where the daily gets away from it. But you see how it acts like a magnet, right? Every time it gets away from it, it comes right back to it. So you can see these moves when you're trying to take profits in a trade. And you see how far away you've come from your 7. You got to figure either the 7's coming to you or you're going to the 7. Because the 7 is a lagging indicator, right? As fast as it is, it still lags. Chances are price is going to come to it. Now, it didn't find support on it right here. It traded way the hell down here. But it did close just below it. I mean, still very much near it. Plus or minus, so 72. And let's see, our EMA was 74. So plus or minus $200 or $300. In the grand scheme of things, really is not bad. On a scalper, you just probably blew his account out. But for a long-term person, it's whatever. It's no big deal. But again, right here, you pushed up. Look how far away you closed from it. Next candle, you came right back down to it. Right here, you closed up way over it, right? You didn't even touch it on this one. You came right back to it. Touching. Didn't, right? Came right back down. Retest. Right here, you're too far away from it. Next 2 candles. 1, 2, touch. Right here. Trade through. Sit on. Blast through. These are the candles that change trends, right? These candles. Because this candle blasted through the 7 and the 20 in one candle. And you got no love on the 20, right? The 20, you touch it like here, you found support. It's great. Not if you're going to smash both of them at the same time. You come down and you touch it once, that's fine. You'll probably find support and you'll probably continue on. 1, 2, 3 days to the upside. You're all good. Right? You smashed both in one candle, forget about it. Now you got to do the same thing to the upside. And because, Bitcoin loves to do the bar pattern, it wouldn't be any shock at all if when it does cross, it's on one massive candle. So like this candle over here, it's a $800, $900 candle. We could easily see a repeat of this right here. In fact, like it would have been ideal to do it at 78.20 because you would have had that level already. And basically, you'd blast down, you'd find support for a day, so you basically go nowhere and then continue down, right? So how many times have we seen, that move? And I wouldn't, I would not at all take that off the table. Something like that, right? You hesitate for a little bit, you don't really do much of anything, and then something like that, just continue like the bleeding. Something like this would put you right on the 618, get you right back to the 5,000 range. But as crazy as it sounds, like it's pretty healthy for that. Okay, it kind of paves the way, right? Because what you don't want to do, I'll tell you, you don't want to do this and this. Get yourself up to, 30. And then decide, remember those levels down at 4,000 that we never really like scoped out too much? Yeah. We're going to go do that for another, 24 months. We're going to go do that for 2 years. We're going to go repeat, this right here. We're going to go repeat that. Like you don't want to have that high just to create that low. Get it out of the way now, is my opinion. And then when you come back down the next time, you don't have to come so far, right? You could come back down to come back down over here. Come back into the 8s. This way the drop isn't as significant. Something like that. You know what I'm saying? But it will, that's the thing about trading. It will happen. I'm not saying we're going to 30 and then we're going to 4,000. But what I'm saying is pullbacks within trends will happen. They always do. You could put this down on a 5-minute chart and you'll see the same thing. It doesn't just go up, right? It goes up for a period and then it comes down. Just like when it goes down, it doesn't just go down. It goes down, it hesitates, it comes back up a little bit, goes back down a little bit more, right? Comes back up, right? Probably the same structure that it was just at, pushes down a little further. There's always the opportunities to try to recognize when that pullback's coming and if the support that you found was truly support, right? Did it actually hold your levels? And if it did, then you look for confirmation of reversal, and then you trade that reversal. All right, so there you have it. There's your educational part of the day. It's done. All right, let's see. Let me add these to the chart here. BCH, ABC. BCH, ABC, what? USDT. Okay. GByte, of course. GByte, USD. Gotcha. Let's see, XRP what? You want USD? We'll do USDT unless I hear otherwise. It'll take a little while to get to that chart, so don't worry about it. You got time, crypto on acid. What MA are those? Oh, well, in my long and lengthy explanation of nothing, you should have found out. That was the 7 EMA and the 20 MA. If you have time, NX Pundi. There's always time for Pundi. I mean, jeez. All right, Pundi, BTC or ETH. We'll do BTC. Or you know what? Well, we might do ETH. I gotta see what the sat count is on that. Too low sats. I can't you can't chart with Bitcoin. There's way too little resolution. Evening all, Marcos, what's going on? So has the wave 4 running flat been ruled out? I don't know enough about Elliott waves to comment on any wave 4s. Sorry, or 3s, or 2s, or 1s. What do you think about the ribbon indicator? If you're talking about something like the Super Guppy, I like those. I use them on another template, not on the streaming template. But yeah, if nothing else, they're just nice to look at. 10-second delay close. I didn't notice because I was talking through, but it's all right. I think I'm becoming a Matic maximalist. Matic BTC, no problem. You got it, Marcos. Matic BTC. Okay. All right. So I think I got it. Pundi Ponzi. All right. Very good. All right. Do want to at least get the numbers here. What do we got? 79.30, 79.60, 7508, 7634. All right, so we lost 300 today, 3.7%. All right, let's scope out our list. What do we got? GVT, BTC first. Okay. We're going to smash through these pretty quick. So I'm going to be hopping off soon so I can eat some food. Why do I not have a chart? Why do I not have a chart? GVT, BTC. Yeah. Okay. There's our chart. All right. So I think we mentioned this last time. We did find a local level of support, and we're starting to paint. Well, we already started, right? We painted that low, high, higher, low, higher, high, lower, or double bottom, right? So that is our indication, right, that this thing's about to go do something. And it's been panning out really well if you can get in on them. So if you could spot this, right, a low, a reversal, right, a higher low, so that's your first swing fail to the downside, and then a push above, typically you have another higher high. So you basically make trend, but then where you should have your next higher low, your next higher low, it becomes a lower low. It becomes a swing fail to the downside, but what it doesn't do is this. It doesn't cross that, right? So if you have that, so like this is like a perfect example, right? It didn't close below this line. This is just like a rudimentary line, but I mean, you do it so that you have the magnet on it and it's like a real line. At that point, we say one of two things, right? You either look for struggle, like 1, 2, 3 struggle, like these big pushes to the upside are like, it's, you're not really sure. But then you push up, you fail, you come down. In this area right here, this is like, all right, this is kind of like a struggle zone. We're unable to get over that. But the important thing is you did get a cross, right? You got the cross from the 7 and the 20 underneath, so you're showing support on that side. And then the other thing we do is we take that original first high, right? The first high off the low, and just throw a box over there. Just do, where the hell are we at here? Just do something like this, right? And take like, you want to get the high, but the high body is actually lower than our other one. So just use a little thought process there. And just like throw a line up, right? So we'll go like to the wick or the next one. Of course, you're not doing any of that until this plays out, right? So at this point here, you got two choices, right? If you have this box. If you come up to the box, right, and you close above it, you buy the box. That's kind of what we've been doing, right? So you come over here, right here, you closed above it, you would have bought it, and you would have been like, oh, that was the worst trade ever, blah, 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 I'm so stupid, and then bang. You got to be a little patient with these things, man. It took 4 days. Your target would have been your 1618, which you didn't hit. So look, man, you keep things honest, right? Not every trade is a winner. You would not have hit your 1618 target, at which point you got to make a decision. Do I sell it, as it's coming down? Do I sell it and just get rid of it? Or am I going to continue, let this thing pull back a little bit to probably structure high, so somewhere in this ballpark right here at the 786, and then come back up, and then I can hit my original target at the 16, or if we have momentum, am I going for the 26, or is something historical? This is also a really good shot where you fail this next one, so you could target your body close on a daily, and at least you're out in profit, right? At this point, if it hits the 16, it'll more than likely come back, right? At least for a retest. So then you can sell here and literally like book your profits, go do something else with that capital, right? And then if it does come down here or maybe even further, like it might come back to structure, then you can rebuy down here and then look for that 2.6 on the next push, okay? So yeah, this is a great example of something that, you know, it already played out. We want, like, I want you guys to find this, find that, and then, you know, let's talk about what the next move is, right? You find those setups, then there's opportunity, or at least it looks like, you know, there's opportunity. And I tried, man. I'm a big fan of harmonics. This is just like, it's just not a harmonic pattern, which is really unfortunate. It would have been nice if it was, but it's just like, they're all just so unique, but they all basically have that same characteristic, right? You have some type of low reversal, right, to a high, like just like this, right? You came down, right, and you came down and you made a high. So right here, you're like thinking about it, right? But then your next one blew out your low. So it was like, there's no trend here, but here you have a trend. 1, 2, 3, 4, A, B, C, D, right? You got a low, a high, a higher low, a higher high, bang, bang. Now you have a trend. You immediately lose the trend, right? You got a swing fail to the downside. So you're like, wow, what the hell is that all about? You know what I mean? Like, that should have stopped up here if this was going to be a trend, right? But it didn't. It failed to the downside, or you got a double bottom. So you're like, oh, wait a second. I've seen this play out before. Right, when it does, you usually get like a banger of a candle. I mean, you're talking somewhere around 10% typically, and that's 9.5%, 9.55%. Now, again, I would have wanted it to. I would have been on the fence about this. Would have said, all right, let's say we took that close, right? So it did close above it. We know it's going to pull back down, so let's go buy the 7 EMA, right? We'll take that trade right there. Up to the 1618, fully would have been 20%. Front run it a little bit, let's call it 19%. But regardless, right, you didn't hit it. That's the issue. When you don't hit it, now what do? You know, what's the plan? You've already held it now for like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, right? 10 days. It's a long time to have your capital in one trade. Unless you're like a multi-day swing trader, and then, you know, you don't really care. You're kind of closing out at the end of the month. So that's when it becomes decision time. Well, what are you going to do? You know what I'm saying? And if you start doing this, which is what I started seeing, right? Take those body closes and just chip away. Maybe do like 80% profits right here. Let a little bit run for the 1.6. But generally speaking, if it doesn't do what it does right here and dies, right, it'll hit the 1.6 if it hits the 1.6. But either way, it's like pullback time. You know, they're not giving us these massive smashes up 1, 2, 3, 4, 5 levels off of this previous structure. They're giving us like a tiny little bit. And classic examples, you can see it on One, you can see it on Matic, you can see it on Harmony. Harmony is one. You can see it on FET. Like, you're seeing these things play out, and they're only giving you a little bit, right, from the previous high. They're not giving you, like, it should have gone all the way up here, right, and it didn't. Now, this candle did, sure, but this candle is part of the algorithm, right? You need this higher high to make a trend so that we could talk about it. All right, so anyway, that's GVT. Right, GVT right now, I mean, at least on the daily chart, I would expect a little bit more downside, bring it down to about 44.05-ish. Retest it, and then you're looking for a break push, right? You gotta push now through this level. I would still be targeting 5,004. I mean, that's a little bit safer. Now, you're still within trend, so you don't have to be too worried. But you are, it's a BTC pair, so you are tied to Bitcoin, and Bitcoin is, it's kind of like not having a good day. You know what I mean? So you have to be aware of that. All right, ARK BTC. Let's check it out. ARK BTC. All right, so ARC BTC, let's see what they got going on here. So bottom level support, so we'll call it to the downside. So you got your low, you got your high, which is like, it's kind of invalidated with this stupid wick right here, but for all intents and purposes, let's keep it. You got your high or low, all right, that's good. You got your high or high, and right, see now, we haven't dealt with this yet, right? That's invalidated because it's actually lower than our low. Is it? Let's see. Our low on here is 665. Our low over here was 666. Yeah, so it's one sat lower. So, you know, is it gonna play out? I don't know, because even this, where it found support, right, is really to the downside of this one over here, even with that low, which is okay. But you can see the struggle over here. Look, right here. Topped out, topped out, topped out, topped out, right? Topped out. Broke through. Found support. Big push. I don't know what size this candle is, but we can find out. It was a 12% candle. Right? That would have been your 10%. 10%, see you later. You know what I mean? That's fantastic. You know, you would have had to sell it and get the hell out. And if you went by what we just talked about, the body, you would have been out safely. You would have hit it. All right? That would have been great. So on this case, right, you have your first high. So your body... let's see, you probably wouldn't have gotten all that much out of this one. Let's get the ray. So your body on your first high, you'd have to go with the next candle because that's this guy. So, you know, you'd be looking to either cross this line or look for a struggle. In this case, there was the struggle was really obvious. So the struggle was right here. Once you got there, you had a very hard time getting over it. So once, you know, this candle would have been your close up above, you would have bought there, and you would have really had the whole candle. I mean, this would have been yours for the taking. Right here, go to the body, right, just to keep life, you know, on your side. 10%. Throw $1,000 out, I walk away with 1,100. I mean, that's fantastic. Now, you didn't get your crossover until right here, and you actually got a bearish crossover right before it. So you have to, like, you know, consider all of those as it's playing out. We can't even throw a fib on here, you know, like a good one, because this is like, that's ridiculous. And you'll get that with some of these like super low sat coins. Like these small caps are they're just bananas. You know, it's like most of this stuff just doesn't even make sense. This would have been the 1.6 target, and look how far away we are. Right, but that would be your next target. All right, so in any event, you know, you probably, if you're gonna dump, if you're gonna reverse, which is a pretty significant reversal, you're probably looking at support like all the way down here. You know, right in that zone. That'd be at least historical support. It'd also be like that little struggle area right above it would be an indication of possible support. But if you're gonna pull back like that, you might as well take it. You know, might as well just take it right to there. All right, so that's ARC. Let's see, BCH, ABCD, BCH, ABC, USD. So many letters. Just so many letters. All right. So what did the non-Satoshi Vision have to give us here? Looks like we broke out of this channel. Somewhat boring. I bet you this made a lot more sense on like the 1 hour chart. Let's just see. For my own sanity, I just want to see if it. Okay, yeah. I mean, it's, you know, it made sense. It made sense. We did break above it on the hourly. Okay. We broke above it, came down, retested, found it as support, pushed up again, still support, pushed up, pushed up, pushed up, pushed down, still support until we broke it, flipped it, kind of like a failed flip, came down for a minute, pushed it back up, and then we're back up. Now we failed the retest so far to maintain significant support. On the hourly, we've seen this before, this big giant M, and that's exactly what Bitcoin's doing. So, you know, you can put trends on here all day long on the hourly, but the hourly is going to give you some, no, I don't want to say false information, but, you know, it's not as clean, let's just say, as the daily. The daily will at least, like, allow a lot of these smaller moves to play out before it gets involved and starts making decisions. This is not like a super great trend, but it does give you an indication of the horizontal difference between that and the orange channel. And, you know, it is sort of working. Support, right? Resistance, resistance, support, flip, down, right? That's a good flip. Found support temporarily, then lost it, closed, smashed through, right? Break above. Your new candle up, right? That should have been your new indication of trend, and then dump, right? Bitcoin dumps, and everything else dumps with it. So, sure enough, it'll dump a source. All right. Yeah, so, you know, this, like, you basically just have to watch Bitcoin, right? Right now, it's currently bearish. And that'll probably be the same on the 4. Yeah, and I'm sure the daily will look even less pleasant. Yeah, less pleasant. So on the daily, you look for like levels of, you know, support somewhere. And this is a good level, right? This white line right here. So coming down to 356 is not certainly not out of the woods. I'd say that's probably a pretty good chance. That would sort of coincide with this 5 level right here. So that's this bottom of the move right to the top of the move before price reversed. So the little level of 5 would be a 50% pullback. Coming all the way down to the 618 would get you down to like 327, but would actually make the most sense, right? If you're actually going to take this thing down, like we just said, you might as well do it correct. Bring it to structure, so 318.71. If I was long on BCH ABC, I would have buy orders at 318.71. All right, that would be my expected pullback, buy, and then push up. Okay, so let me check this real quick. Blah, 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 blah. Ribbon in a 10-second delay. People, you must get you in the head that a lot of this low volume shitcoin will never see all-time high. Please do your own research on this coin. On what? On shitcoins. 2018 and ICO will never come again because regulation in the market. Whew, that was a lot to read through. But yeah, well, I don't want to say you're right and I don't want to say you're wrong, but I like where your head's at. We're in a speculative market, so it's just speculation. So to have the same run that we had in the ICO craze of 2017 is very unlikely. But at the same token, it's crypto and anything goes. You know, you fart in the right direction of a mainnet launch and you tap the right people, you'll see something go up 60% in a day. I mean, we've seen it. On vice versa, we've seen it back the other way too. So you get a hack on an exchange or you get some crazy information, whether it be true or not, you can see something dump 30, 40, 50, 60% in a few hours. It's just the way it is. You know what I mean? You know, regulation may be coming, but regulation is not here. And it is certainly not going to go everywhere. You know, to globally regulate something like this just isn't going to happen. The only time you ever got every country together on anything ever was to, isolate Antarctica from the rest of the world, from civilians, from you and me. And that's probably the only thing they've ever agreed on. As far as, I think it was like 167 countries or something like that. So my point being is, it's too difficult to say anything like that, especially when we're just too young of a market to fully understand where it can and where it can't go. If you look at like penny stocks is probably a great example, because penny stocks are mostly like gambling, speculative type trading, right? Where you're hoping for like a long shot, and some of those will like literally go to zero. In the case of shitcoins, going to zero is almost an improbability, right? It'll always like be at one. Someone's gonna pay $0 for it. So you always have that one like last guy who bought it at one. He's like, woo, and he's trying to sell it for like $1 million. But that being said, right? There's no value behind it. Then there's dark energy. It's awesome. If there's no value behind it, then yeah, getting one of those things back to all-time highs is not that it's virtually impossible. It depends on the investors, right? It depends on you and me. That's we are the traders, right? So I say it a million times in the back of my head, but it's like we can make Bitcoin do whatever we want it to do. That's like a fact. If the sellers stop selling and the buyers, who aren't us, let's just say, are like the outside people just getting in, are willing to pay X amount, then you just keep raising the sell price. It's that simple. You have buyers and sellers that are always in control, and they're always trying to, be the cheaper guy, right? So the seller, when he's panic selling, he has to look at the buy orders and decide like, well, who am I going to front run on the sell side so that I could get out of this trade? And the buyers are, they're always looking for a deal. Well, I don't want to pay, $298. I'll pay $297.50. Like, okay. So then you'll stack all those orders on the buy side, and you stack order sells because nobody wants to sell it under 300. And now you have a spread. Well, watch the order books one day, and you'll see, right? The order books, most big exchanges, the books are fake, and that's fine. Like we already know that. But like smaller exchanges or small volume coins, you can see that book is kind of legit. But just look right next to it, and you'll look at the actual orders that go through. You'll see who's front running who's selling on the cheap side, right, to get out of the trade, and who's buying above asking in order to make sure that they got some in their back pocket. So it's an inevitable game, really, of who's either being cheaper or who's being more greedy. But at the end of the day, we can set that price. I truly believe we can set that price to whatever we want. You know what I mean? As long as there is a buyer willing to pay for that much and a seller willing to sell that much. But we could be in a $25,000 spread, right? And then when that one dude comes in and he decides that he's going to pay 25 grand for it, well, guess what the new mark price is, right? It's 25 grand. That's the last order in the book. That's just how that works. So we control, as a whole, all people who trade crypto have a certain influence in order to move these coins based off of our sentiment as traders. So if you see something like, seller, right, and you're like, I just really want to get into that because it's so low, It's only been around X amount, yada yada. We'll at least get, up to 50% from where it was, right? Whatever your reasoning is. If you're watching the books and you keep seeing a front run on a buy, a front run on a buy, a front run on a buy, and the buying pressure is building up, well, that's when you start seeing those coins move, 5, 10, 15, 20% in a day, because everybody's just chasing having some of it because they want those gains, right, to realize, right? They want to get a 10% rip or a 20% rip, so they'll buy it above what they're asking for. They don't wait for the trade to come back to them on an entry. They just buy it because they just want to be in it, and then they want to ride it up for the next couple percent so that they could then try to sell it. But then they realize when they're selling it, everybody else is selling it, so they have to front run the sell orders. So like everyone's selling at like 5,000. You're like, all right, I'll put it at $49.99. You know what I mean? So I'm the first guy on the list. And then you'll see someone come in at $49.98, and you're like, oh man, I just got front run. So you're like $49.97, and that's how you see the price comes down so fast. So it's simple trading, right? But just in a different perspective. If the price is going down and large buy orders are there, is that an illusion to keep me holding? Not like on the bigger exchanges, they can fill the book with fake orders, right? That, like, you ever heard of like a buy wall and a sell wall? That's like super typical for like BitMEX. And like Stamp, when like Stamp was big, and Finex when they were big, and Trex when they were big. Like, they all lie about the volume. Like, I'm not, like, I don't know if there's an honest exchange out there. But they like to report that there's a lot of volume so that more people trade there, so that every time you trade, you cough over some fees and they get paid, right? It's a business like anything else. And that being said, going by those order books is like a joke, right? It's like a psychological barrier that somebody's, has a massive sell wall at 8,500, right? So in other words, it would take, thousands and thousands of buyers, right, to buy all of that's being sold at that price in order to then move the price up to the next level. You understand what I'm saying? So that's why the wall is like a psychological barrier. The wall is there to keep you from attempting to push it above that price, especially on the a little bit more shady exchanges. They'll throw the walls on there in an event to suppress the price down. Those would be sell walls. The buy walls are on there to get you, me, and everybody else in there to buy it, right? Because you see all these other people want to buy it. So when they finally decide that instead of like having their orders down at 8,100 and current prices at 8,200, if they're just like, fine, I'll just front run and pay 8,201, well, they're going to wipe out every order in the sell book, right? Because all those orders would get eaten up by that large amount. So you'd have the price stuck but pushed to the upside because he'd be willing to pay more at that point. All the sellers that were willing to sell less at a lower price, all their books would be wiped out, right? And then you'd be left with the only people willing to buy. The price is much higher. So now that's when you get these big jumps in price from like 82 to like 82.50 or 82.75 or 8,300 in like seconds, is because someone just wiped out all of the people that were willing to sell between 81 and 81.50 are wiped out. There's nobody left willing to sell at that price. The next guy who's willing to sell is selling at 8,300, and he ain't budging, and nobody's front running him. So the price is 8,300, right? The last price in the book, which is like, let's say what somebody paid, was 8,200. Now you have $100 spread. All right. So now when you get people in there that are like, I just got to get into this trade, I don't care, and they market buy, they're buying the next order in the book. So if you're buying and you're like, I just got to get into this trade. I don't even care, blah, 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 whatever. Just press the freaking button and let's go, right? And you got $1,000 order, mark it, right? And the next guy selling is 8,300. You just set the price. You just set the price at 8,300 because you were willing to pay it and you had someone on the other side willing to sell it. So now your mark price is 8,300 until you wipe that book out. And then next guy steps up and says, well, I'm not selling for 8,300. I'll sell for 8,350. Well, now you got people on the buy side that are like, I'm not paying that much. And then you got some dude rolls in and like, I got to take the kids out, yada, yada, yada. I just got to get the hell out of this trade. The highest buy is sitting at 8,200. He's like, screw it, 8,200, right? And just sells. And he'll sell at 8,200. Now the price is 8,200. Now the mark price is 8,200. You understand? So that is how, that's how trading works. That's how trading crypto works, because crypto is a peer-to-peer trading system, right? It's I need someone to sell if I am a buyer, and a buyer needs someone to sell too. You know what I mean? And it's, the buyer, seller, sellers, buyers. Like, you're not selling to a market, you're not selling to a store, you're not selling to a investment firm. You're selling to the dude across the street. You know what I'm saying? So that's why when you see free falls, right, is because nobody is on the other side buying your knife. You know what I mean? So it's just gonna dump. There's nobody buying. So you'll see licked orders, right? And those are automatic liquidations because somebody was leverage trading and they ran out of leverage, right? Their leverage brought them to, let's say, 8,000 on the low side, and once it crossed, right, and it hit 79.95, right, they got licked out. So basically it's just liquidation, right? They have no funds left, but it's considered a sell order. So the sell order was placed 79.95, which means that now the mark price is 79.95. And if you ain't got a soul on the other side who's like, well, I'm buying $79.95 because I think that's a dope price, well, then you're beat. And that price will continue to go down and down and down and down and down until, right, you have someone willing to not sell it any lower and someone on the other side willing to buy it higher. You understand? So that's your rundown on buying and selling. All right. Anyway, so what are we looking at here? Yeah. ABC. So further downside, I would imagine right now is expected. If the trend holds right here, then that's good. Overall, bigger picture, I'd be looking at 318 unless Bitcoin does something crazy and starts, going up. So yeah, that kind of takes care of that. All right, we got to blast through these other ones here. GByte USD. So let's do our all-time favorite, most charted coin forever. All right, so we do have a level down here that we were sort of expecting to see price do something with. It does look like it did do something with it, so that is good. Let's see if we have that thing. So you have a low, you got a high. Now this was like an instant fail because then you had your lower high, but then you didn't make a higher, right? So right here is where it failed. So this is basically on just a normal everyday swing fail from this side. You're on a swing fail from earlier in trend, which is all the way up here. So that swing fail is meeting resistance at this very moment. Right, and that's that guy right there. So on the daily side for a coin like this, you really would like to see this candle that we're painting right now. You would really like to see this thing close up above both the 7 and the 20. Even without the cross, at that point you really have to, or you just consider further downside. But this candle came up and blasted through. That's real nice. But it did fail on structure, right? This whole like accumulation area here, it couldn't get through it. There's too much buying and selling going on here. There's probably still way too many open orders, and it just knocked it all the way down. So you got further downside, still high or low, but overall, you know, they're buying up these lower prices. So that's a good sign. You know, people are hungry. They got a lot of buy orders down here, and that's why you see the wicks and not any body. So, I mean, that's at least a promising side to the downside, that this area down here, right, is liquid. This zone has a lot of hungry people. In fact, I would go as far as to say this zone has a lot of people interested in buying. Right? There's probably a lot of people with orders down at 29 that are, you know, hoping to get filled on a chance wick like this or like this. All right. So, you know, swing fail, looking for a close above, right, our swing fail line for, you know, slight confirmation that we could try or at least attempt some further upside. All right. What the hell is that? Oh, get out of here. All right. So GByte, what do we got? XRP USDT. All right. So what do we got over here? Right. XRP is not Ripple. Ripple is not XRP, but they are both the standard. All right. You had a nice breakout play here, and you were really doing something for a minute, and then, you know, like everything else, right? Bitcoin just said no. And when it did, it kind of ruined the party a little bit. Let's put that back there. All right. So you had a good thing going. And right here, you know, you like, just like we just saw, right? You failed to get over the high, right? But you got right to the body high on the daily. Remember the daily. All right. So you had a low, you had a high, you had a higher low. So that's like actually a trend. So you didn't really have like the big one. We would have liked something like way up here. But the bigger picture would have been, I guess technically still high. So then the bigger picture would have been this guy and then this guy. So, you know, if this guy was way down here, then we could talk about it, but not really, not so much. And plus you're in a different trend. So sideways action just broke to the downside on this symmetrical triangle. I would expect a retest. So somewhere to 4107 before further downside, probably testing out this line down here, this little trend coming from that local low. All right, so that's XRP. Let's see, Pundi and PXS. What are we doing? BTC. Yeah, I don't think we could do Pundi on. We're gonna have to do Ethereum because you know, there's no resolution, right? You can't like. I mean, you can, but you know, what are you supposed to do with it? Right now, we're looking for, you know, confirmed retest of our longer trend. But let's check ETH. NPXS ETH. All right. Okay. See this one we actually looked at. All right. So see the difference here, like, you know, and it's not even great, but you can get a higher resolution trade, meaning you got more entries and exits in between the sats of a BTC pair, right? Because Ethereum, there's more options. So bigger play, this is kind of like a deep crab. It looks like I was expecting it to come down to here. It went a little bit lower, so it didn't quite get the 1.6. Let's see what that turns into. That's not even my thing. That's my thing. Get over here. Okay. A 1A with a 1O. It's like invalid in every way, shape, or form. But it did get price reversal, so that's good. And this is fine, right? We topped out previous structure. That totally makes sense. Good move to the upside. I mean, that's a great move right here. So all things considered, you know, right now you're just like, if it was a little bit lower, it would have been better right there. But whatever, you can't win them all. So now it's just like a typical pullback, right? You're not like, you haven't truly established trend yet, but you're 3 out of 4 steps. So that's pretty good. So we'll call that 440. So 440. Right now, you know, you drop down. You found support. We were just talking about fibs earlier today, right? So you got your high. You're looking for support on the way down, right? That's what you're looking for. That's why you put the fib there. First level found support 236. Perfect. Next day, right? Pushed up, came down, pushed a little lower, but where did it find support? Where did it close on? 382. Where did it find support? 382. Where did it find resistance? 236. Came back down the next day. Where did it push down to? The 5. Where did it close above? 382. Found support. 382. Next day, pushed back down again a little further. 382. Pushed all the way up, blasting through the 236, checking previous structure, failed. Okay, so there's nothing we can do about that. There's no fib for that. All right, next day, came back down. Where did it push down below? 382. Where did it find support? 382. Next day, push down. What do you got here? You lost to 382. 382 lost, didn't quite make the 5 on your way down, right? Next candle. Next handle, you hit the 5. No problem. You hit the 5, you hit the 20 MA. You're good on both ways. So now you got support resistance on both ways, moving average and Fibonacci. You came back down again. Next day, found support on the 5. Next day again, support on the 5, pushed up. Where did it fail? It failed on the 7. Now you're clamping, right? 7 down, 20 up. You're looking for a clamp. Further downside to be indicated when the 7 crosses below the 20. So after we just explained all that jazz, what do I like to do, right? Previous structure. Previous structure always seems to make sense to me, and especially when it lines up to levels. Previous structure right here. Right, you came up, down, up, down, up, down. This is your low, swing low before the high. So this is your structure, right? That's your structure. Coming back down and retesting structure is just like a support resistance flip. There's nothing wrong with that. So I would be looking at support at the 618. Now, what do we say about, you know, altcoins, right? Typically between the 709 and the 886. So you'd have to look back and say, all right, was there anything like really important over here? You know, these levels right here are important, but they fall above the 618. So it's like, I'm cool with that. This area of hesitation looks important. The downside area is the 618 right here. So you say, all right, let me grab my horizontal ray. Let me get the downside portion. Bang, bang. And look at that. You're talking 326, 327, 1 sat away. So that just gives me a little bit more confidence, right? That's where this is headed. It doesn't mean that it will, but for me, I would believe that it'd be a highly probable, more probable, that it would be dropping to the downside, at least to the 618. Now, if it gets to the 618 and it doesn't look like it's holding support, right, and it starts failing, then I'm eyeing up the 709, which is previous structure right here, just about. It's close enough. And then from there, you know, be checking out like the 786. The 786 doesn't really have all too much to confirm by structure-wise, which is unfortunate, but hey, you know what I mean? It's like, it is what it is. It was your pullback right here to your downside. So it was your high to low. So you got your high, your low, your high, your low. So on your second of 3 runs, right, this was your low. It was your 786. Okay? So on and so forth. The 86 is the top of the swing low body. So that's what I see for Pondy Ethereum, not Pondy BTC. Pondy Ethereum, I would be looking for failure of the 5, push down to the 618, somewhere around the 327 mark. And Matic. All right, we'll finish off with Matic BTC. Okay. So Matic BTC. Now there's not a whole lot of history on here, so something like this, we got to at least drop it down to like a 4 hour just to like see something. It's just you can't like. It's just like there's not much to do here, but we'll do this, right? You get your low. Just try to get like an idea of overall, right? Overall trend obviously is, working its way up. So you can do this, which I do like to do. And so you find out that high, say, all right, 573. And then you come over here, you match your 573 for timing purposes. We'll call it 572 is fine, right? And then we want to see, did it respect these levels on the way down? Because if it did, that tells you the type of traders that are trading this. Okay? And if it respected the levels on the way down, then you're looking for it to respect the levels on the way back up. Which means you could put a little bit more faith into your buy and sell orders, your entries and exits. So it did. It pushed all the way down to the 618. Right? Not perfectly, but I don't think I'm either on perfectly, but whatever. You know what I mean? Like, it's enough it's enough. So 618 smashed up through 236, found resistance, came back down, right? Over here, you're kind of in no man's land. You're in between the 5 and the 618. So you'd have to look for like previous structure, which I guess is this zone right here. You see those 3 candles? See, it's like bang, bang, bang. Right, and then over. So maybe, I don't know, that might be a long shot. But anyway, pushed back up again, kind of rolled through, it's kind of like a roll down, push up, sort of like a retest, but failed. Came back down to the 618, kind of danced around it a little bit, pushed up and down, up and down, up and down, up and down, up and down. That's where we got our new trend. So we'll see if that holds, but this trend is not a trend, not a confirmed trend. It's just a line right now. It's just an idea. But on the brighter side of things, right, it does seem to have at least settled on this level down here, which is unfortunate because it's kind of between the 618 and the 709, and the 709 is not an actual fib level, but it does seem to be respected in crypto. But that is kind of annoying because there's no confidence in this being any type of reversal low. That being said, at least on the 4-hour chart, we did come up and we came down, came back up again and down. Another, push up, push down. This one, previous structure, right? So it's good trend. Sideways, then up, right? Up and then down. Do you see the pattern here? So, you got your low, you got a high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Like it's a trend, like you're in trend. So, what do we always say? Like, don't fight the trend. If you're in a trend, you're in a trend. So ride the trend. So the trend right now, local, is long on a reversal from a 618 pullback, right? So what you do have to look at is that candle right there could be danger candle. We'll find out right now once we got this thing sort of in place. Not yet, but I mean, it's getting right there. And by that, I do mean that, if it does break out to the downside, that's potentially terrible, right? So you don't want, you want to stay within trends, right? So now you're looking at your low, you break, you break this level and you just broke your low, you break this level and that's your support, right? So your first line of support structure high, and that's this guy, Second level of support would be like mid structure. That's this crap right here. And then your third level of support is going to be previous structure low, which, in the right type of market would be this right here, which is also your previous structure high, which has already been tested, right? So you don't need to do a double bottom. You may, but you don't need to. Unfortunately, that's like, depending on your trading style, that could be your stop, right? And your stop might be 13% away. So think about your risk reward on a trade like this. Now, unless you were in all the way back here, that's a different story. You probably booked profits a few times already. But that being said, we're currently, at least on today's candle, pretty big loss so far today, 4% down. And I mean, that's not great. And it's trading lower than the 7, and it's currently failing our, newly established trend. This would be confirmation as well. So not good. It does have the 20 just below it, and you literally just hit structure. Right. So yeah, as we speak, structure at 317. Now, if you see like a good buyback, that puts a little bit of faith into, people like that level. But we've seen a lot of buybacks lately that all they were so temporary, like good buyback, and then this. You know what I'm saying? So remember that you're still in trend, but there are definitely levels over here to pay attention to. 317, 304, last line of fence, 280. All right. Cool. Did I miss anything? The price is going down and large buy orders are there. Is that an illusion? Keep me home. Hey, snow dash. Maybe something brewing. Thank you, cheers. Okay. You're very welcome. All right. Yeah, that will wrap it up for tonight. So look at that. I could just type right now. Thank you, everybody. Boom. All right. I do appreciate you guys coming. I always do. Thank you for being here. Look, we got into some educational type talks today. So that was cool. It was cool. I hope you guys either learned something that you didn't already know, or maybe something's a little bit more clear. I don't know. We'll see. Let me know. Whatever, in any case may be, and then we'll touch on it again when the time is right. All right, so everybody enjoy the rest of the night. Hopefully this week will be way more streamy. I know, it's fine. And then I'll catch you on the next one. All right, so I want to see you guys on the exchanges, and until then, happy trading.